I'm Theo Gatrakos. I'm head of Central and Southeast European Investment Banking at Citi. I'm delighted to be part of this panel of distinguished delegates and speakers, and delighted to be part of the SCE Private Equity Forum. A very, very interesting set of conversations during the course of this morning, and hopefully that hope that this panel also lives up to the expectations that the previous panels have set. Clearly, interesting periods, inflection points in many ways, for our region, for Europe, more globally. A very active year, from a deal-making perspective, and I'm here to discuss this with three very distinguished guests and colleagues. First of all, and I'll let them introduce themselves properly in their first response. But Andrea, with us, it's Andrea Stanculescu, partner at Abris Capital, and based in Bucharest, so very close to our region. We've got Matei Paun. Matei is managing partner at the Black Sea Fund, and we've got Martin Paev, who is, among other things, the chairman of the Sordis Group. So I'd like to welcome each and every one, gentlemen, and thank you for making the time, and look forward to an interesting conversation. Let me start by asking Adrian a question. Adrian, many of your portfolio companies are active in sectors which we can describe as next generation, ESG focused, forward looking sectors. In your view and in your fund's view, how are themes like innovation, sustainability play into your own investment strategy? And more broadly, how do you see these themes shaping the investment landscape, let's say over the next 5 years in our region?
Thank you, Theo. That's pretty interesting question, and I'm glad this is coming more and more on the panels. Probably 4 or 5 years ago, ESG approach and ESG attention was more of a motto than an action. But I would say this changed quite a lot in the last 4 or 5 years. Even looking inside our fund, we improved a lot in this area. Now we have a team of probably 3-4 people doing ESG for our portfolio companies, and new deals that we are looking at, and really working with our LPs to provide them with the comfort that we are taking a really good attention on these aspects. More than this, I would think so definitely evolved over the last 4 or 5 years from more an intention into something that's embedded more and more into the deal making, and especially in the monitoring of the companies and value creation of these companies. Where I see this going is that the deals will have, or the companies that funds will invest in, will have more of a meaning of contributing through their core business to the ESG. We already have such an example in the portfolio. We have a company that's in the recycling space, but really in the wider, let's say, circular economy. This is called Green Group. It's a large regional circular economy player, investing in various streams of recycling. So we really see quite a lot of interest and attention from our LPs, but also from parties from outside, let's say Romania, looking at this kind of businesses and getting quite a lot of approaches on this company in particular. So I would say this has changed in the last few years, and is going to change even faster, probably driven by the Green Deal and the circular economy attention within the EU, but also within the multinational companies, especially the big FMCG companies, paying much more attention to the circular economy and ESG aspects of the business. And companies in this space, in terms of recycling, consulting for green aspects and sustainability, will definitely benefit. And I hope Romania and our region overall will play a big role in this. I'm not sure I answered everything.
Thank you for
willing to elaborate further if needed.
And I'm sure we're gonna get questions on this, and and I'm aware that I believe Mirna Marovic is hosting a panel on ESG later today, which I think is is very topical these days. But thank you. This was particularly insightful. Maybe quickly switch to Matej. I don't know, Matej, can you hear us?
Yes, I can hear you.
Super. Okay. Look, Matej, maybe switch the conversation a bit towards sort of entrepreneurship, and obviously this is something that you and your fund are particularly familiar with. What are you seeing as the key themes driving entrepreneurship in our region? And I'd love you to try and answer this question both in terms of what you're seeing in recent months, but also how you see sort of the next 5 years. What would be your bet as an investment practitioner? Would you continue focusing and taking a view that entrepreneurship will be driven by increasing digitization and increasing enhancement of the digital economy? Do you see trends which are kind of pointing to back to basics, and more kind of fundamental staple sectors and so forth? Any observations on that I think will be interesting to our audience.
Okay, thank you for the question, Theo. It's a broad question, but talking to entrepreneurs as we do, almost every day, clearly the foremost topic on their mind at this moment is the COVID crisis. For some, it's make or break. For others, it's a fantastic opportunity. But somehow no one is untouched by this. It's creating a lot of volatility, as it were. And I think that differentiators, such as healthy balance sheets, financial firepower, and things like that, are of paramount importance for entrepreneurs today. I think that in this period, it's very easy. Well, it's relatively easy for an entrepreneur to perhaps achieve what he might have achieved in 2 to 3 years. He might be in a position to do so, within 6 months, and vice versa. I think that there's also a very significant threat for some to lose progress, that might have otherwise taken years, to basically regress very, very quickly. So these times are quite turbulent for most entrepreneurs. I would also add that, strategically speaking, in my mind, one of the biggest trends, which I think is starting to hit from what I've seen, but I think will hit even harder, is a profound tendency for nearshoring. I think that the traditional globalized production chains are going to be very significantly revamped and brought back to the core economies, in the sense that from a European perspective, I think that the European periphery, of which we are obviously part of, is going to potentially very significantly benefit from that phenomenon. And obviously, everyone's been talking about transforming from a digital perspective. That's I mean, I don't think there's much to add on that front. It's clear, it's happening, it's going to accelerate, and if there's a new normal out there, it's probably this. Although it's been a new normal for some time, so I don't know how new it is anymore.
Fair enough. And yeah, I agree with you. I think there are some very topical lessons to be learned for the periphery. But I agree with you. I mean, we keep calling it the new normal. You're right. It's the current normal. It's the current normal, and let's see if in the future it's going to be the old normal. Thank you for Martin. Martin, let me ask you a bit of a general question. Hopefully not too unfair. You obviously, you've been operating in the region for many years, but also, on a more, European or even global level, you become aware of, how big organizations, and global associations think about, our current reality. In your experience and from the messages that you're receiving, how do you believe that COVID has impacted the way that companies are thinking about, the short term, the medium term, and also would love to get a bit of a segue from that on how you think deal activity in our region, but also more broadly, can be impacted, maybe over the next 12 months.
Yeah, thank you, Theo, and thank you for the couple of questions. Quick intro on myself. Martin Paif, I'm an investment banker and asset manager. I've been doing it all my life, more than 20 years now. I'm founder and owner of a group called Sortis, which we have several subsidiaries. So we have an investment banking advisory firm which does mergers and acquisitions and fundraisings. We have Sortis Real Estate, which is a real estate investment management firm. We have hospitality advisory company, and we have we just set up Sortis Ventures, which is a venture capital private equity investment company. I'm going to be talking more from the position of the advisory firm here. What we see as activity first. Sortis Invest is a member of a group called Global Scope, which has presence all over the world. And I was leading the COVID task force there. We did an internal questionnaire to see how the business is being affected in the different countries. What we saw overall, it's quite a lengthy survey we did, but just in the summary, what we saw is most companies see short-term impact and are not very concerned about the medium and long term. So everybody still sees it as something that is gonna take a while, and then things are gonna back to a normal. Obviously, it's gonna be a different normal, as you said already. But business is going back to normal. In terms of deal activity, what we saw is as soon as COVID hit, there was a moment of disorientation. Everybody wanted to take a breath and see what they should do. What we saw is the biggest impact on transactions, on deal activity, was that most of the deals were delayed. To a less extent, there was a reduction in prices, and also to a smaller extent, some deals had fallen apart. But the biggest effect is deferred transactions, which is both on a national and on an international level. So cross-border activity was affected about as much as national activity. Still, what's interesting is deals that have fallen apart or have been delayed, the reasons are almost equal: decision by the seller and decision by the buyer. So in some cases, investors decided to postpone or to drop their investment. And in other situations, the sellers said, we have to postpone, or we're not interested in doing the deal in the current environment. Overall, over the medium term, the members of Global Scope expressed the view that they expect to have a heightened amount of M&A activity after the initial COVID impact and the lockdowns are over. Because obviously, we all expect that there is going to be shifts in the way business is done. Many sectors will have to restructure and adapt. And whenever there is restructuring, there is also sometimes need for mergers and acquisitions or for funding. We see increased interest for funding, both equity and debt. My personal view as Sortis is that we see more interest for debt transactions, whereas equity fundraisings, there is strengthened interest, but a bit less than for debt. I think that should probably be covering your questions, Theo, for the time being, right?
No, that's I mean, that's very helpful. I mean, maybe a very quick follow-up for a 30-second answer. You mentioned some deals, fall away, some deals get postponed. In your view, I mean, what are you seeing more? Are you seeing more deals where just, they're getting deferred and, should actually come back when, COVID is behind us? Or do you see more situations where actually, the strategic logic for a deal falls away and will never come back on the margin?
So far, the effects are more temporary. So probably the ratio of deferred versus failed deals is 2-to-1.
Okay, very helpful and to the point. Thank you, and we do hope that this is the case, and this will bring increased pipeline in the deal flow next year, hopefully. Maybe back to you, Adrian. Look, I mean, obviously, Abris Capital, has been and is still one of the preeminent investors in our region. So let me ask you a bit of a provocative question. We do see that our region is becoming more of a beaten path, maybe not entirely beaten path yet, but more on piste, if you wish, for a number of our bulge bracket global investors. We're seeing Macquarie making a big investment in Romania, which probably a few years ago it would have been unfathomed. We're seeing people like BC Partners, KKR, and so on and so forth. I mean, the list is long. How much of a differentiating sort of competitive advantage do you see knowledge of the country and knowledge of the region being, for somebody like yourself and obviously a number of your distinguished peers, who have been, homegrown regional private equities?
Yes, thank you, Theo. First of all, I'm really glad that you see and you kind of confirm this interest from the larger funds and institutional investors. I think this is encouraging and somehow a vote of confidence to a region that maybe historically wasn't that attractive. I think this is really positive and a sign that that there is space for different layers for investors at the different layers of the cycle, and I think this is what is usually, I believe, still missing in the region, but it's improving. And what I mean here is that there was at some point quite a lot of competition for a certain range of deals. And then there was no competition above, no competition below. So that's really not helpful for the entire, let's say, private equity venture capital ecosystem. So I think once we see these larger funds coming into these markets, and I think it's not only Romania, it's also the region as a whole, it's really positive because then there is more exit options for us. Now going back to how a fund like us or similar to us would deal with that, I don't see this as a competition. First of all, even mostly they will be coming in a different, let's say, deal size range. So that's helpful for us because we kind of professionalize the company, grow a company, and have more options to exit to these larger funds. But even if there will be funds investing in our, let's say, sweet spot or investment range, which is, by the way, between 20, 30 million and up to 75 million euros equity ticket, I think it's still positive because the region, it doesn't suffer from over competition. It suffered for lack of funding historically. So more people in this ecosystem, it's only going to create a virtuous circle for the industry and for entrepreneurs to see that there are options to grow businesses and exit and get liquidity at some point in time, and also for some maybe local strategics or international strategics to have options to sell, spin off their let's say divisions or businesses to a deeper let's say a bench of investors. So I see it all positive. I don't think the region, my main conclusion is the region doesn't suffer for over competition. I think it suffers for underdevelopment, and whoever comes into this space, it's really beneficial.
Thank you, Andrea. It's great and that's constructive and conducive. Just to complement what you're saying, we at Citi, we do feel the same. Increased visibility, increased awareness is going to help. Is going to help in terms of exit options. Is going to help, in terms of liquidity. Hopefully, it's going to help in the sense of more liquid capital markets, which is a key ingredient to your exit ability.
Maybe one thing, Theo, if I can kind of try to answer some part of the question I didn't answer before, is how a local fund will differentiate itself from the others. And I think really let's say the company ecosystem, so entrepreneurial ecosystem, will benefit from involvement of funds into for a certain period of their life, to really introduce the good practices, help steer the strategic direction, bring more experts in the board, the supervisory board, but also really, let's say, different caliber of people in the management teams to push for certain projects, strategic projects. So I think this is what local funds or funds with a local focus should do, being closer to these companies, helping them develop faster and really get structure, within a certain number of years, so they are ready for exit, and definitely help them in the exit process. That was historically there, but I think more operational involvement with the companies would benefit and differentiate. It's probably very difficult for a fund like Blackstone to take over a very entrepreneurial company and really get involved. We see that companies at various sizes, not only in the small cap but also in the mid cap, even large mid cap, would really need more strategic guidance and more procedures in terms of how boards are run and ESG practices and things like that. So I think this is the angle, logical angle, and the funds that do this well will let's say benefit at exit time.
Super. Thank you, Adrian. Gentlemen, I'm gonna mix things up a bit, and I'm gonna switch to Martin. And the reason being, there is a very interesting question from the audience that I want to tag along to the question I was intending to ask Matej. And maybe let me take this opportunity at this moment to invite our audience. We've got a very interesting chat function. So if you're gonna, if you want to ask a question that you would like our panelists to respond to, please do that. Within chat, you can try. I'm checking everything from event stage, backstage. So any forum you feel like typing a question, be our guest. Would love to try and answer it. Martin, you have personally, a long track record in real estate, and it's. I'm not going to be saying anything fascinating when saying that COVID has had a mixed effect on real estate, whether you look at it in Western Europe, our region, and obviously it varies, between, asset classes, office, retail, even hospitality. How would you summarize the COVID impact in our region, and how do you see this impacting opportunity, investment activity, let's call it again, over the next 12 months?
So I guess you want me to go sector by sector, because it's very difficult in the different subsectors of the property segment.
Paint the picture in a punchy way as you see fit.
Okay. Overall, the real estate sector was impacted, of course. We see very different effect in the different segments. Clearly, hospitality, especially hotels, was badly hit. And I believe there's going to be bankruptcies there, especially in the vacation segments. They were quite badly hit this year, though many hotels managed to switch to some local demand instead of having the foreign demand. But still, it's quite badly hit. At the same time, even before the crisis started, there were a number of investors with whom we were chatting that were sharpening their teeth to buy bargain deals. And actually, this whole thing started with the bankruptcy of Thomas Cook, because when it went bust, it was clear that some hotels are going to have big issues, and there's going to be distressed deals. And after that, when COVID hit, this was just made worse. So it's at the same time issues with the sector, but at concurrently having investor interests, of course, looking at distressed deals deeply undervalued assets. On the residential side, at least in Bulgaria, we haven't seen any drop in activity. We saw a shift in activity because many people decided they want to have a bigger apartment or a house with a garden so that they can have some free space, or overall, this is the main effect. Prices have not gone down yet. In Western Europe, what we see is in some places there is very high demand and even increase in prices, but this is kind of local situation depending on the country. For example, in Netherlands right now, they have a special change in the tax legislation, and it's going to become more expensive, or transaction costs are going to be higher in 2021. So there is very strong interest from buyers right now just to buy before they have to pay higher taxes. At the same time, we see in France the property market going down. The office segment is definitely going to be impacted because we see with the lockdown, many companies had to move to home office and remote work. Many of them decided that actually it works for them and they won't need as big offices anymore. So my expectation is the demand for commercial space is going to be less in the medium run. So some of the projects that are currently under construction, once they are finished, they're going to have an issue with the occupancies. And this will also present investment opportunities for investors who have patient money and are looking for distressed properties. And there are such. On the retail was being hit anyway by the trend with e-commerce. COVID is just gonna accelerate this trend. The COVID effect is temporary, but the e-commerce effect is something that is gonna wipe it out. Of course, not all retail is gonna be hit, but certainly we expect rental prices to go down. And the one that remains is industrial. Industrial, I think, is going to benefit because exactly of the same trends. There is more interest in building warehousing, various facilities. So there I see more proper business opportunities, not so much distress.
Super, understood. Thank you. And I couldn't agree. Very some great insights across asset classes. And I agree with you. I mean, you made a comment, which is that COVID in some cases ends up being what some people have labeled the great accelerator of our generation, just accelerating trends which were already there. E-commerce was not born with COVID; it's being accelerated.
Yeah, technology is already there, and the new situation changes the way people think, and they have to embrace technology as we are embracing it right now, though it doesn't work perfectly, it seems.
Exactly. Okay. Look, Matej, I'm turning this over to you, we're being complimented by a good colleague who on the chat asked the question. So, Matej, I meant to ask you about geopolitics, and the question was basically that we know geopolitics has always been a factor and impacted deal making in our region. We're currently at an inflection point, obviously, and I was going to ask you, what are the themes that you would be keeping an eye out for from a geopolitical perspective to determine the investment thesis for our countries? And let me complement this question by Gavin's question on the chat. Gavin is asking, what can those funds with the Chinese government as main LP tell us to allay security concerns given the political climate with China? And I would like to maybe even broaden the question even more, not necessarily make it, we should address China, wouldn't make it China specific only. I think it also relates to, to other funds, with LPs from different jurisdictions. So I'd like to leave this couple of questions with you, and maybe at the end, I would also invite Adrian and Martin to offer any perspectives that they may have.
Okay, thank you. I mean, this actually brings me back to my initial comment about nearshoring and the reorganization of the production and the logistic chains that have increased dramatically initially during globalization. I mean, I think that the main impact is that a lot of the manufacturers that were benefiting from this period of globalization are going to be put into a situation whereby they need to invest in and move their production capacities essentially much closer to the periphery of Europe and in some cases within Europe itself. I mean, clearly geopolitically, you're seeing two significant blocks forming, and Europe is somewhere in the middle. I think that Europe has a historic chance to perhaps try to position itself in a way so that it can benefit to an extent from both blocks and not necessarily lock itself in a particular position. But nevertheless, this is going to be a long and strenuous process, in my view. Clearly, the goalposts have been marked, and I think that the key decision makers understand what the next 10 to 20 years are going to be about. And I think that again countries such as Romania, but not only obviously Bulgaria, and Poland, and all the other CEE countries have in some ways a historic opportunity to position themselves in such a way so as to capture and recapture the manufacturing positions that this opportunity brings, and it's not only in manufacturing; it's also in services. I mean, IT is a very good example of that. In terms of specifically the Chinese, I think that again, the Chinese are not going to simply walk away, and I think that they are going to be even more active in terms of identifying opportunities in which they can invest in the periphery, and again, this is all good for the CEE region. The real geopolitical question is one that pins the Chinese on one hand and the Americans on the other hand. I don't think that the Russians are going to have much to say about any of this. They're going to be stuck pretty much as energy providers and pretty much resign themselves to that, I think. In any case, their importance has been much more in a military security type of context rather than economic. If we are to look at geopolitics a bit further south, then clearly you have Turkey, and I think that's going to be a significant issue and challenge for Europe and for our region. I remember the 90s when Turkish companies were making significant inroads in Southeastern Europe. They were owning banks, manufacturing companies, and then all of a sudden, it kind of dwindled and they all went away. But clearly, what's happening now in the Eastern Mediterranean is going to significantly impact, I think, our part of the world. You've got South Stream coming online. You've got various competing nations looking to develop gas resources. Not only in the Eastern Mediterranean, but also in the Black Sea as well. So, in terms of energy, and clearly geopolitics is going to be on a wild ride, I expect, in the coming years. So, if to basically boil it down, I see China, US, and nearshoring on one side, and then I see Turkey and various other countries fighting it out for energy resources in the Black Sea and in the Mediterranean.
Wow, thank you, Matej. That's a very, very comprehensive response. Let me, conscious of time, and there is, there are more questions on the chat. I'd like to ask Martin for 60 seconds commentary on your side on, Chinese investment into the region and how you see security concerns, being alleviated. And then Adrian, I'm saving you for another question which just came in, which I think is going to be, very, very suitable for you. But Martin, over to you.
Chinese are getting more active. Obviously, they are a very strong investor in Serbia. Bulgaria, not so much yet. It seems a bit difficult for them so far. They have some investments, but not as many. I believe we're going to see more and more Chinese investments towards our region. Overall, there's still quite a big cultural difference, and it is a deterrent for these deals. And the other thing is that the Chinese themselves it's still a socialist country, so everything is very political. Many decisions are not done on a pure business basis, but based on politics. Bigger deals have to be confirmed by government officials, and this takes a while. So those who are doing deals with Chinese have to be very patient.
That well said. Yes, you need patience, but it pays off in the end sometimes. Thank you, Martin.
But you need to have somebody who understands the culture if you want the deal to happen.
Correct. That's a very astute comment. Adrian, we got a question from Kostin Taratsila. Kostin probably needs no introduction, but Kostin obviously heads the Allen & Overy office in Bucharest. And as he's having a good month because, as he says in his questions, he has signed 5 M&A deals, over the last month. Well done, Kostin. But I think he's making a good point. Having engaged in a number of deals during COVID. Question is, which areas of the M&A process are, in your view, most effective these days? Kostin offers a comment, which is that the most problematic was the management presentation. Which can actually be, challenged based on lack of physical interaction, technological reasons, and so forth. But in your perspective, Adrian, site visits, negotiation, management presentation, due diligence, what do you find the hardest to do in this environment?
Yeah, I have to first of all, congratulations to Kostin for a very prolific period. Also another sign that the market is active, and I think that's encouraging. Let's hope it keeps up at this pace at least. That would be a great success for this year, given the circumstances. I have to agree with Kostin on the management presentation, but really the dedicated buyers would do whatever it takes, even with the restrictions, to come and see teams, management teams, and do the site visits. So I think it's kind of a sign of who's the really interested one. You can easily see now because they won't travel if they are not really interested. So we were involved in looking at new potential deals. Also, we were on exit processes in some other companies, so we can see it from both angles. That if we are interested, we went there and then saw the companies and met the management team. I think it's very difficult to replace it with the video calls, though. Okay, I think it helps. What I would say on the overall DD process, it takes longer. So I'm not sure if this is the hardest part, but simply it takes longer. There's a need for probably 2 or 3 discussions on the same topic that before you only need one discussion. So I think this will simply take slightly longer. Other than that, I think the length of the process is probably something that people hope they can shorten, but usually it doesn't happen, and these processes take longer. I would see also negotiations. Maybe being as difficult as the the lengthy DD process is a problem. Probably the negotiations would also be a bit more difficult, given you cannot see the reactions of people that easily on the video calls.
Super. And to have also a positive note, what if anything you have found, that working from home, working without traveling or during COVID has been helpful, has been conducive to deal making activity, if anything?
That's I think there are more negatives, I would say, because you tend to be too efficient with your personal time, which takes a toll at some point. Because you're always online, it's very difficult to separate your life between working and personal life. What gives us, I think, at some point being a bit more efficient. So not sitting in too long meetings discussing more or less the same thing, because this is difficult to be done over video calls or phone calls. So I think a bit deciding maybe slightly faster on things, just to not to go through yet another difficult and long video call. I think this is my learning, I would say.
That's well said. That's a smart approach. Super. Look, gentlemen, being conscious of time, and would like to give our audience some time to network until the next panel, which is, as we said, a very interesting panel around ESG. Maybe ask each of you 30 seconds. I'd love your view, and so I'm putting you on the spot right now. Deal making activity in Southeastern Europe, 2020 versus 2021. In one word, do you expect it to be flat in terms of volume of activity, down or up, and why? 30 seconds each of you, starting with Martin.
My view is 21 probably is going to be down, because from what I see currently, I expect a new lockdown, which is going to last for a while, and then just it's going to take some time for things to recover. Overall, I think that's the main thing. There are some sectors that are going to be booming, however.
Thank you, Martin. Matej.
We also own a local investment bank called BAC, and I think it's useful to note that all the deals that we started with prior to COVID are still going strong, and we hope to actually close one or two by the end of the year. So we haven't lost any deals. Also on the fund management side, we are eagerly looking to close at least one more deal by the end of the year. I mean, as far as we're concerned, all pistons are firing at full at full capacity, and our intention in any case is to maintain that posture going into 2021. I think that the necessity for deals is going to increase, not so much in terms of exits perhaps, but in terms of positioning capital to be deployed so as to take advantage of various market opportunities.
Super. Thank you, Matej. Adrian, over to you.
Thank you. It's good to have the last word always. I think the year, especially in Romania, is going to be 2021. Is going to be, and also I hope it's going to be similarly to 2020. I assess 2020 as being quite active, as per the latest deals, but overall as interest of buyers and sellers to transact. I think it's going to continue like that in 2021. So flat, but I think it's a good level that happened this year. So I also hope it's going to maintain going into 2021.
Thank you, Adrian. Thank you. And not to avoid having to answer questions, I think I echo that we also see a 2021 being reasonably robust from a deal making perspective. Whether it's going to be up or flat on the year across the region, it's to be seen. But I agree with most of the comments made that the COVID impact in our geography is going to be deferring activity, deferring investments rather than necessarily, canceling them. Okay, I don't see any other questions, from the audience. So maybe let me take this opportunity to thank very much, SCE Private Equity for hosting this, fascinating forum. Lots of very interesting sessions, and thank you for giving us the opportunity to interact with each other, network virtually, and to discuss in panels like this one. Let me take the opportunity to thank our audience for being, very engaging, for being patient with us and our technological issues, and for fielding all of those very interesting questions. And look forward to networking with you, offline. Obviously, thank you very much to each and every one of our very distinguished panelists, Adrian, Matej, Martin. Thank you so much for for having an interesting exchange, very interactive, provocative sometimes, a very powerful panel, a dynamite panel. Thank you very much, everybody, and enjoy the rest of the forum.
Thank you for moderating, Theo, and thanks everyone for being with us in the panel.
Thank you very much.
Guys.
Have a good week.